Hey, folks, welcome to InTheMoneyStocks.com's daily analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, everybody, into the action we go today on this Friday, January 7th, 2022. Market staging basically a sideways chop day with some volatility in the mix. We got the jobs number, the non-farm payrolls this morning. That came in a little bit weaker than expected. Now, a lot of people were in the camp that you would see a pullback in yields with weaker economic news. That did not happen, all right? So I think that's important to note. The 10-year yield closing above the key 1.75% level at 1.771, and now we are above that previous high on the 10-year. All right, that's exactly why the markets were under pressure today. I mean, there's no other reason. Bottom line is higher yields, stock prices go down. Predominantly, you're going to see technology get hit the hardest. We've continued to see that, and we saw it again today. All right. In terms of price action, the market chopping mostly with yield movement. So initially, we saw a little bit of an upswing as yields pulled back. Then as yields pushed up, we saw the bigger sell. Then yields pulled back again, and then we chopped into the end of the day. And then there was just a little bit of selling, as in all fairness, we've seen this before when people are nervous. No one wants to be buyers into the weekend when things are uneasy, when they don't know what the yields will be on Sunday night when they reopen. So you saw, again, just a little bit of selling there into the end of the day. Overall, it wasn't a big down day. I mean, again, NASDAQ did take a bigger hit, of course, but the S&P was down about 0.4% on about 80 million shares traded. If we look at the Qs, this is where the bigger drop came in, but only about 1.1%. It wasn't monumentally a mega-sized move to the downside. 1.1%, considering we've been moving in 3% ranges, not a huge move on the NASDAQ 100. All right. Again, yields were up today a little bit, but the most important thing about it is we got above that 1.75% high. It hasn't confirmed yet. Now, if you know the confirmation signal, this is something that you should really, really pay attention to, because yields play by the same rules as stock prices, as crypto prices, as commodity prices. The charts work the same way. So let's see, do yields hold up above that level? Do they confirm above today's highs? If they do, you likely are headed to 2% on the 10-year, which means further downside in stocks. Okay. All right, let's go to the daily chart here on the SPY. You can see, again, we've pulled back beautifully. We're still within this upsloping range. And again, you can see quite the upsloping range there. In terms of price action, if we do continue to sell, the obvious conclusion is that this would be where you would find first support on the SPY. All right, on the Qs, we're a lot closer to that. You can see right here, I mean, we basically hit this low. If you take a trend line and put it through the previous 1, 2, 3 lows, we are right there. I would dare say there's a good chance that on Monday we tag this upsloping trend line. Now, once we tag that, that's where things are going to get very, very interesting. What do I mean by that? Well, basically, is it going to hold or is it going to break? If it breaks, you're headed down to the 200 moving average on the charts, all right? And again, that is down here at 363 and change, which again is still another 16 points to the downside. So again, here's your support area, this upsloping trend line after this one right here, this area here. If it breaks, you're going to the 200 moving average. The 200 MA we haven't hit in a long, long time, so that will be a lot of support. Take a look at this, folks. You have to go all the way back to April of 2020, the last time we were at or piercing or touching the 200 moving average. For those of you that know about moving averages, and this is good for educational purposes, moving averages are like home base. Generally, charts want to come back and check back in. The 20 MA is the closest home base. That's the one you always go back to more often. 50 MA, a little bit less often. And then the 200 is the least visited, but it's also could be viewed as the most important. So again, considering we've been away for this long, it's just a matter of time until we get there, and then you would expect a bounce off of that on the QQQ. Okay, The Russell chart, let's quickly look at that. The Russell coming back in here. So interesting on the Russell, you had this pivot area right here, and it got up and tried multiple times to break through it and go to this gap fill. I still remember when we took our profits on that TNA, or TZA, I think. No, TNA, yeah. On the upside, and again, the idea was that it still might go higher, but I didn't want to risk it. And sure enough, so far, that's been the smart move that we did that. So nice to see that pullback. Now, if we get back down to this area here, that's the big level of support. Will it hold? If it doesn't hold, then this would be an epically bearish chart on the Russell. All right, but I do expect at least some sort of bounce there. Down the line, do I think it's going to break lower? Yes, I do. Absolutely. All right, these markets, it always blows my mind how analysts have remained so bullish with the Fed tapering, and even how individual investors are. Because again, if you just think about it so just gently, logically, and what I mean by that is, you had the Federal Reserve in 2020 of March come out with insane stimulus measures. You also had the U.S. government come out with insane stimulus measures, literally sending checks to Americans. I mean, again, look historically. That's basically never happened where we've seen the government sending checks on a regular basis, to Americans out there as stimulus procedures. At least not to that extent that we've seen. So it only makes sense that when the Fed now says, hey, we're going to pull back on the stimulus, we're going to start cutting that QE that the markets become, adapted to, that as you remove what's been the catalyst for the expansion in PE ratios, in valuations, it's only common. I mean, it just makes 100% sense that valuations are going to come in. All right. So again, to me, it's not surprising. There's a lot of people out there that are, sitting there twiddling their thumbs and being shocked by it. It shouldn't be surprising to any of you guys that when the catalyst for the upside was stimulus. So if you're going to remove the stimulus, the catalyst, there's going to be a lack of catalyst to keep prices up, and prices are going to come in. All right. We'll watch and see just before we go into the crypto charts of Bitcoin, which had a nice little dip today. I do want to just say today was an awesome day. I love days where our shorts work for us, our longs work for us. I mean, everything was just working for us. Viacom, take a look at VIAC. Beautiful move on Viacom today. Look at the run it's had recently, guys. And again, when a market's going down and you have a stock that's going like this, that's always positive. So again, good to see that. You have the 200 MA up here at around 38 and change, but that's a beautiful move. Then if you look at like Alibaba was up today, Baidu was up today, the Chinese stocks had a great day overall. And then if you look at the shorts like an NVIDIA, it was down. And again, if you're, the QID was up, which is a short on the NASDAQ 100, those type of things. So really nice to have those type of days. Doesn't always work that way. But again, when you position yourself the correct way based on charts in general, that's the way it should ultimately work out. Just maybe not on a day-to-day basis, but overall, over the longer term, that is the way it should work out. So good stuff there. All right, next up, let's take a look at the cryptocurrency chart on Bitcoin here. This is Matic. Let me flip over to BTC US dollar here. And Bitcoin had a beautiful dip today, getting down close to the 40,000 level. Now, that is support. So, again, definitely support here on Bitcoin. And the reason you know that is because if you go back to earlier this year and you draw a trend line right there, look at that, folks. Pivot high right here, right there. Then you pierced it. You kind of chopped around. Then you got above it and came back in here. And then we pierced it today. So you did hit support on Bitcoin today. I'm in the camp that Bitcoin probably gets a bounce back to about 46,000 over the next week or so. But I still think it's going to go lower. Your next big support, there'll be some intra-level supports. Like there's one here, right, which is around 36,000 and so forth. And then even one down here. 30,000 is going to be the big one, though. So again, this is kind of a minor one right here. This is the major down here. And 40,000 is also major. Remember, 30 to 40,000 was the big one where you chopped in it for quite a while here before you came up. You pulled back one last time and then broke out, retested the scene of the crime and went up. So again, that's important. Now, the one thing I am following closely is you also have a head and shoulders neckline here, which again is we are trading below it. So the question is, does it trigger? In terms of head and shoulder patterns, You would never short a head and shoulder pattern that's breaking, and the reason I say that is because then you're chasing it. Look, how many red days we have? 1, 2, 3, 4, 5, 6, 7. 7 red days. Actually, it does signal we should bounce here. So just be aware of that. It's more of a big overall signal that we're probably going lower in crypto, but you don't trade specifically off a head and shoulders, at least in this scenario where you've already had 7 down days in a row on Bitcoin. Again, if you know your time counts, you should actually be in the camp that you're going to bounce. And in fact, in verifiedinvestingcrypto.com, I actually bought Bitcoin today, as well as a little bit of Ether at these levels, just starter positions, but expecting a little short-term bounce here in the crypto space. Okay? All right, let's go to the next chart here, which is going to be gold, GLD. Gold coming back just a little bit here. Again, I wish I had more to tell you guys on gold. There's not a whole lot to tell you at this point. If you look at the larger picture here, you're still inside. This is all consolidation from this epic move up here. So that is bullish longer term. You also have a wedge pattern I think will break out based on the bullish consolidation. And then again, you'll head to the highs. But at this point in time, are we right in the middle of the thick of things here? Yes, we are. So you just kind of sit back and don't do a thing. All right. Looking at silver. Now, silver, again, eked out a tiny little gain today. Silver's a little bit more tricky. It does have still that same consolidation longer term off of this big move up, but it wouldn't shock me to see silver have one more move down where we tag this on the SLV. And again, I think I've said that for a long, long time, and I've kind of been on the sidelines of silver versus being relatively aggressive on saying, all right, you got to own gold, I own gold, GDX, etc., on those plays. Lastly, on oil, guys, we did see a little bit of a pullback on oil today. Nothing dramatic, though. I mean, really nothing crazy here. Just a little bit of a downtick. And again, I think in general, we just kind of sit back. I haven't added to my my SCO position yet, but I certainly would if we go a little bit higher, as I continue to be in the camp that oil will have another sizable dump here. You still haven't taken out the high, which means you're still making lower highs. That's still bearish. You made definitely a lower low here, then past lows. Granted, it's been a phenomenal bounce, but I'm still in the camp that at least we see some sort of pullback. Short-term support's going to be this necktie of the two moving averages. Okay? All right, guys. Let me just see if there's anything else on the radar. I don't see much else on my radar, at least, so I think we kind of just stay back at this point and let the charts play out next week. Again, just choppy action, a little bit of weakness continuing to show. I still think, yesterday on the S&P 500, I talked about how I thought it was somewhat bearish, that they couldn't bounce the market yesterday. The bulls, the buy the dippers, tried to early on, and it just failed, and we basically closed flat yesterday. Today, we saw a little additional small downside, but I'm still in the camp that, unless yields are going to pull back, and, at this point, they maybe get a small pullback, but overall, I still do think yields are going to go higher. It's just a matter of, does it happen right away on Monday where they just continue to surge up, or do we see yields, pull back short-term, consolidate right around this 1.75% and then break to 2%. But again, prediction is we're going to 2 to 2.25% this year in 2022. The question is, when does it happen? All right, have a great weekend, guys. Nice solid week. Let's go right into next week and keep crushing it. Have a good one. Take care.